only, the concepts and conventions. And in this, first concepts are there. So one by one we'll discuss. First concept is the business entity concept. Business entity concept. So already we discussed the business. Business is a have a special entity, that is artificial entity. Okay, the accounting is a language of business. So accounting is a language of the business. The business should run for the longer period. Okay, let's run for the longer period only. And in the we are recording the transaction in the book of accounting or in the book of business. So we recording in view of business only. We view of business only. So before that, there is a entity. There is an entity for every business. May it is a trading or non-trading, may service oriented or everything or manufacturing. So there is some special entity. That entity we called as a artificial entity. Artificial entity. And the business entity concept says, the business entity concept is says, so the business separate from owners, owners separate from business. Okay, the main objective of the concept, the business separate from the owners and owners separate from the business. The business entity concept, any legal or economic unit which is control economic resource and which is accountable for those resources is an accounting entity. The accounts are maintained and accounting reports are prepared for a specific account entity whose financial affairs can be considered. So here in Viva business only we are going to write. Suppose you are employing, you are working in somewhere, right? So in that organization, right, the proprietor is there, the founder of the business is separate, and the owners are there. Okay, you know all, but you are not an employee of that owner. You are employee of that business. Okay, Wipro company. Suppose you are working in Wipro company, right? So who's that is founder or managing director of the Wipro company? You know that, but you are working in Wipro company. You are employee in a Wipro company only. But so you will never tell. You are never give an answer. I'm the employee of somebody, but we are the employee of an organization only. So that's why here the business separate from the owner, owner separate from the business. So why we are separating means, right? The business started by a natural person. Here we treated the business is we treated as artificial person. We treated as the business is artificial person. Okay, but the artificial person which is created by the natural person, which is created by the natural person, he invested some amount for the start of the business. Okay, which kind of business you want start? Okay, so for that nature, the person will introduce certain amount and he will start the business. He will start the business, may manufacturing, may trading, may service. So based on your objective, so we start means. And here we are discussing the business having a special entity, that is artificial entity, and the artificial entity which is created by the natural person. You know, so robots are there. The robots are created by the natural person only, and the robot is active like a person. But we are not that robot. We are not treated as human being. It is artificial machine which is created by a person, which is created by the person. But we are calling that robotic. But it's a special entity is there. So we are treating is an artificial person. It's the same like the business also is we are treating as an artificial person and applicable to all the legal approaches, legal. And so we are recording the transaction in view of business only, not in view of the owner. And why we are not recording in view of owner means, so the business started by the somebody, he introduced the cash or invested the cash in the business for start the business. And here the artificial person is like a person. The person feel I am receiving a cash from a natural person. So that is the artificial person is treated as is a liability. The capital, the amount is which amount is invested by the proprietor or owner of the business. That amount the business treating as a liability. Treating as a liability. Okay, so the person invested in the business. The person is invested in the business. Okay, the person invested in the business, right? So business is receiving cash from the internal person, is a owner, is not an outsider, internal person, right? So the business is feel it as a liability. It is as a liability. So that's why who invested inside person in the business, the person who invested a amount in the business, the amount we are called as a capital. So don't write the proprietor name in the books, because the business is borrowing from amount from the natural person. The natural person is inside only, is the owner of the business. So that the business is treating as a liability, which amount received from the owner, right? So the amount, we are called as in accounting, any amount. So for every amount there is some name. Okay, there is some name. And here also, who invested inside person in the business, so that amount we are called as so capital. And the capital is, we are giving a nickname to the our owner who invested cash in the business. Okay, so the cash the business is treating as a liability. So these are reason only the balance sheet is a tally. The balance sheet is a tally, because the capital we are treating as a liability, the business is treating as liability. So that the business may taking a cash or borrowing cash from the inside person and even outsider person, even outsider persons. So how you are invite the cash? Main shares. If it is sole proprietorship, so just one person is there, that person is inside only, just we will give the amount in the business, that amount we are called as simple capital. If you are invite the shares, okay, so the amount is we are called as share capital. And if it is go to the partner capitals, okay, partners capitals, okay, so is also limit. And other source of finance also there, so that is may debentures, may bank loan. So these are we are taking from other from outsiders in different manner, so that is a different. So here main, remember main point here, the owner separate from business and business separate from owner. And we are going to record the business transaction in the account in view of business only, not in the view of owners. And which amount is invested by the owner or a proprietor in the business, the amount we are called as may if it is sole proprietorship capital, may it is, go to the partnership, may it is we are called as partners capital. If it is companies, we are called as share capital. And again, the share capital may divide based on the company, may preference share capital or may equity share capital. Okay, so by this reason only the balance sheet is tally, because which amount is invested by the owner, the amount where the business is treating as liability. Okay, so that's why total asset is equal to equity. Total asset is equal to total equity. So the person invested certain amount for what? For start the business. So what is the necessity things in the business? Basic, we want building, we want land, we want machines, or we want equipments. So provide that first, facilitate that first. Okay, after that, based on that you may run. Okay, so we want travel from one place to another place, so we need transport aids, may bike, may cycle, may bus, may try. So in different aids we are using. Okay, so the same here business also, first what you necessity things, so provide that first. Okay, so provide right, that's why here net equity is equal to, or equity is equal to, so total assets, equity is equal to total assets. So these are business entity concept. So first think the main so 2 points, main points are what is the objective of the business entity concept is, the business entity concept, business separate from the owner, owner separate from the business, which amount invested by the owner, that amount we treat as a capital. And we are recording the transaction in the book in view of business only, not in view of owner. And when owner introduce the cash in the business, so you are giving and you are writing, you are not writing his name in the book, but you are giving a nickname to him, that is capital. And when he withdraws cash from the business, when we withdraw the cash from the business, so we are treating that is drawings. drawings. Okay, the two nicknames are there in the business for owners. When he introduce the cash in the business, so we are called as that is capital. When he's withdrawn cash from the business, so we called as that is drawings. Okay, and by capital, the business liability will increase. By drawings, the business liability will decrease. Means you are introduce the cash and at the same time you are withdrawn. When you are introduce the cash in the business feel it's a burden. So it's a liability. And when you are withdrawn from that amount from the business feel burdenless because the amount will reduced. The amount is reducing. So two nicknames are there in the business. When is introduce the cash, so we called as capital. When is withdrawn from the business, so we called it as drawings. So this is a business entity concept. And one more concept is the second concept is dual aspect concept. And in this your book is they are not given orderly. So first dual aspect concept. The dual aspect concept in a first class we discussed that is evaluation of accounting. The double entry system, dual aspect concept, double entry system was proposed by Fra Luca Fasciolo. He was known as the father of accountancy. In the year was 1494, we know that. And here the dual aspect concept also says for every transaction there should be two aspects. Whatever transaction happened in the business or happening a business, okay, there should be two aspects, one receiving aspect, one giving aspect. Where receiving, there is a giving. Where giving, there is a receiving. Okay, so that's why one debit is equal to credit. One credit is equal to debit. So receiving aspect, giving aspect.
Excuse me,
Giving
sir.
aspect,
You can
receiving
explain
aspect.
again,
Yes.
starting from this point which we have started now.
What, ma?
Sir,
Hello.
can you explain this dual accept concept from starting?
Just now,
Hello?
just now started, ma. Hello.
Some points you have said before, no, sir, that you can explain. Some points you have started, no, sir.
Yeah, okay, okay. And the previous class we discussed the evaluation of
Some
accounting.
lines you started, no, once you speak again.
Yeah, no
Okay,
problem.
thank you, sir.
Right. So previous class we discussed in evaluation of accounting and who was proposed this accounting system, right? And the accounting system was proposed Fra Luca Fasciolo. He was known as the father of accountancy. He was proposed double entry system. In any transaction of a business, there should be two aspects. One is receiving aspect, one is giving aspect. Knownly, unknownly, daily we are doing two aspects. While purchasing anything from a shop or while you are buying anything from the shop, right? So when you are receiving a good from the shop or shopkeeper and at the same time you are giving something to some amount to him, right? So two aspect you done. Receiving is giving, receiver is giver, giver is receiver. He is giving to you and at the same time he is receiving from you. And you are receiving from him and you are giving to him. Okay, so that is dual aspect concept. In any transaction, there should be two aspects. There should be two aspects. Okay, so that is receiving aspect and a giving aspect. So that receiving and giving aspects. So here we are called as debit and a credit. A debit is equal to credit. Credit is equal to debit. A receiving aspect is equal to both should be equal. Okay, the measurement, the amount. Okay, so the both aspects should be equal. I received 10,000 worth of a product, and at the same time you must give the 10,000 only. There should be two. There should be equal. One receiver is giver, giver is receiver. Debit is equal credit, credit is equal debit. This is a dual aspect concept. So as per this concept only, we are going to prepare a balance sheet. As per this concept only, we are going to equal the balance sheet. Okay. So here, see, for example, we are human being. So we have some desires. We want to eat ice cream and we want to eat biryani and we want to see the mobile, watch the movie and we want to went to the park. So this is entertainment. But there is no entertainment for the business because the business is artificial person. You only moving that. You only moving that, right? So it's artificial person, right? So for example, you have 100 rupees, you spent the 100 rupees for ice cream, right? So the business is saying everything should measured in the money. One more concept is there, that is money measurement concept. That is money measurement concept also there. The business is so should measured in the money, that is should be financial character, so show the result. But as a human being, we ate ice cream, show your result, how your feelings, and ఎవడని అడిగాడు అనుకోండి, we can't express that. We can't express that. So I want to eat the ice cream, I eat that. So complete show what is the result of that ice cream in your body. We can't display that. So because we are human beings that, but that type of feelings are not there for the business. Okay. So what happened? What about 10,000? You must show the result. So I purchased or I bought this 10,000 worth. So lively is there 10,000 worth amount. So I bought a bicycle, I bought a stock, goods purchased, I bought a stationery, I purchased stationery. You must you must give a result that if you are happened a 1 rupee you spend a 1 rupee, you must show that. That is money measurement concept. Everything should measure in the money. Everything should measure in the money. So here also the dual aspect concept. I introduce cash in the business as per the business entity concept. I introduce the cash. So what you done with that amount? So I purchase machinery, I purchase furniture, I purchase building, I purchase machineries, I purchase stock. You must explain that because the business don't have a feelings. And which amount you invested, with that amount I ate ice cream అంటే అది బిజినెస్ లోకి రాదు అది. I ate ice cream, I ate biryani, okay, I went entertainment. So it's not comes under like that. It's not comes under business activities. Okay, so 1 lakh rupees is there, show the result of that 1 lakh. Yeah, I invested 1 lakh rupees in the business. So what happened? 1 lakh rupees I purchased building. So that's why here the capital is equal to net assets. Yeah, please note down, write down please this accounting equation. Just heading, take the heading accounting equation in your book also there. If you have a textbook, see the 19th page. Okay, so capital is equal to net assets. Please write down net assets. And that equation not there. So capital is equal to net asset, right? Okay, which amounted the owner invested by the owner. So you purchase first necessity of the business, may building, may land, may furniture, may machinery, may stock. So what require the business need of the business, you purchase that. Okay, you bought that. Yeah, you are showing that is representative. One amount represent you already showing. See, small amount is one small. Okay, one line amount. Suppose 10,000 is there, right? So 10,000, 5 digit amount, that is 10,000 rupees. But the 10,000 amount, only single amount, that is affecting for many. With that amount affecting for many. So manamu ice cream tinnam, we ate ice cream, we ate biryani, we purchase a bicycle for kids for 5,000 rupees. And for many purpose we are spending that amount. One small amount you are spending means one amount is giving many result to you. One amount may it is small or big amount, but is giving to many result to you. Yes, one teacher is there, one teacher in the class is one teacher only teaching the class, take the class, but many students are there. So here one income is there, but many reflex is there, many result are there. Okay, so 1 lakh rupees I started a business. So with what you started a business? I bought furniture, I bought machinery, I bought stock. So like that you are explaining. Yes, all are there. And the amount is not sufficient for start the business. So we want more amount. So we want take the loan from others, my bank, my colleagues, my friends. Okay, so you took the liabilities, that is outside liabilities. Okay, the inside liabilities called as capital, outside liabilities may called creditor, debenture, loan from bank. Okay, so these are the outside liabilities. Okay, when the capital is not sufficient to start the business, the businessman or business will take the loan borrowings from others. That is we are called as outside liabilities. Liabilities we are called. Okay, Now already capital introduced by somebody, and that is not sufficient, so that you are borrowing from others. So why you are borrowing? Remaining, we want some items, we want some equipments, or we want some assets, and or we want operating purpose, we don't have a cash, so that's why we borrowed amount. Yes. Now one is inside capital, which is invested by the owner, and one is capital, one is outside liabilities, which is borrowed from others. So both are there. So both you spending for assets only. Now before that, capital is equal to net asset. You wrote that. Now please write down capital plus liabilities is equals. Please write down everyone. Capital plus liabilities is equals. Capital plus liabilities is equals. Capital plus liabilities is equals total assets. Total assets. Total assets. Capital plus liabilities is equals, so total assets. And before this, right? So we wrote the equation. That is, what is that? Capital is equal to net asset. So net asset means, because there is no liabilities, so that's why the equation is there. Capital is equal to net assets. Capital is equal to net assets. Now you borrowed some amount from the outsiders. You borrowed some amount from outsiders. Okay. You borrowed some amount from outsiders. The liabilities now added. Liabilities added. Okay. Liabilities added. Now, when you are added liabilities, and with liabilities again we purchase some asset, and we needed some cash for operating purpose. Operating purpose. Okay. Now, when you are added a capital liability, so that is called total assets. Now, capital plus total liabilities is equal to total assets. Please write down. Capital plus liabilities is equal to total assets. Now, again come to the now fresh accounting equation. Total assets is equals, please, total asset, please follow me, please. Total asset is equals capital plus liabilities, which is outside liabilities. The capital is inside liability, and you are borrowed from outside of the business, so that is outside liabilities. Okay. Now total asset is equals capital plus liabilities. Capital plus liabilities. Capital plus liabilities. So capital plus liabilities. Now next, please come down. Capital is equal to, capital is equal to, please come down. Capital is equal to, capital is equal to, capital is equal to total assets minus liability. When you are minusing the outside liability from total asset, you will get again capital. So capital is equal to total assets minus liabilities. Total assets minus liabilities. Now next, liabilities is equal to, if you want to know the liability is equal to, liabilities is equal to total assets minus capital. Liabilities is equal to total assets minus capital. So these are accounting equation. Accounting equation. Okay. So these are the accounting equation, and many times they are asking, they will give certain amount and find the capital, or find total asset, or find the total liability, or write the accounting equation. So they are giving for short question. So this accounting equation, it comes under dual aspect concept, so that the business don't have any feelings. Okay. So don't have any feelings. See, and this don't have a feelings. That's why if any small amount is there, you must show the result. You must show result of that amount. So this is accounting dual aspect concept, and every asset is equal to every liability, and every liability is equal to every assets. So that is a accounting dual aspect concept basis. Based on this only, so we are going to prepare a balance sheet, and the balance sheet will tally because of the capital the business treating as liability. Okay. Next, one more concept is, that is, come to the that is principle of keeping mind will be preparing final accounts. That is going. Sorry. Okay, leave it. Then it's come to the money measurement concept. Money measurement concept. So money measurement concept means, just now we discussed everything should measured in the money. Everything should measured in the money. Okay, everything should measured in the money. So what one amount is there? One amount is there, right? So may homogeneous products or hard products or anything. So this should be expressed in the money only, but not expressed in physical units. Kilogram, 1 ton, okay, one bike, one building, one furniture, one table, one person. One person is there in your company. You must measure the person in that money only. How much you are giving salary to him? Is comes under salary, or is comes under wages, or is comes under remuneration, or is comes under honorarium. Okay, so who are working with mentally, so for that them we are giving a salary. Who are working with physically, so for them we are paying a wages. Okay, and who are top of the administrative purpose, you are giving some honorarium, some so remunerations, right? So this is the based on, and just a person is there. Why is there? Suppose you don't know who I am. When I entered in your home, immediately you will ask, who are you? Because you don't know me. Because you don't know me, and at the same time, one relative is there, then your home, your mom and uncle and cousin brother, whatever you are measured. Just that is a measure in the relation. But when I entered in your home, you will immediately ask, who are you? Why you came into my home? That is simple question. And at the same time, one person is there, one organization. So what about him? Because he's a lecturer in the college or he's employed in our office. If you are not giving any tag to him, then why he came inside? Simply we will ask him, why you came inside? You are not belongs to my college or my office, then why you came into? So everything you are measuring the money. I am paying salary, is our employee, so that I am paying salary him. Yes, the person also you are measuring in the money. Yes, the business thinking like that because the billing business don't have any feelings. Okay, so don't have any feelings, so that everything should measured in the money only. Don't measured in physical unit, physical 1 person, 2 person, machinery, livestock. We have a horse, we have donkeys for carrying purpose. So don't measure. So the donkeys worth are there. The building 20 crores value are there. You must explain that. If building is there, so for example, simple. So in Secunderabad area, we have a one building. We have our home. Immediately we are measuring. Oh, in Secunderabad area, it's very costly, very highly. Okay, so just we are imagining that. So in business also, everything should measure in financial character. If it's not, if you are not measuring financial character, it's not comes under business. It's not comes under business. Okay, right? So, paper लाने गए. Next, object to evidence concept. Okay, so just now we discussed everything should measured in the money, but here everything for every purpose you must maintain one objective, because the business is artificial person and the person is moving with some natural person. The person must maintain one objective, right? I purchased, so everything somebody asking when you are purchased a product from anywhere, so we are asking a bill, we want bill. Okay, so you spend for the some purpose and you are asking a bill. It's not nothing wrong. So you are maintaining, you are in a systematic manner. You are maintaining a proper documentation. You are maintaining proper documentation. You are right. So that objective evidence concept, everything should measured in the money. So everything should measured in the money. That is money measurement concept. For every transaction, you must measure one. You must maintain one objective evidence. So what is the proof? Because who are you? Today you are employing your company. If you are not maintaining a proper systematic records, they will give simple tag. He don't have a systematic manner. Yes, right. So if it is compulsory. Suppose accountant is there, you must maintain one documents for every transaction. Yeah. Okay. So some lecturer is there. What is this systematic? You must take the class time to time. Okay. So that is systematic. So here the person, the employee, the lecturer is working under one organization, and who are paying to him, the paying person must maintain the documents. So for everything, you must maintain one objective, one evidence, proof, that is my bills, my invoice, my promissory note, my borrowing, my debenture, documents. So everything you must maintain one objective. Okay, so my objective. So this is the object evidence concept, and next. So going concern concept. So going concern concept. In the last class also we discussed the business should run for the longer period. And the going concern concept now. This business should run for the longer period, not a shorter period. If it is running for shorter period, it's not comes under business. Okay, the business should run for the longer period. Yeah, in longer period, longer activities, we must know the, because hopefully everyone hope today we are here on earth. Tomorrow may or may not be. If you have a doubt regularly, we can't survive our life. Simple life. Simple. So we are expecting. Okay. So I will be there. So so we are planning everything. Okay, we are planning is everything. But you don't have a guarantee. But the business is their guarantee. The Tata company, the many years back they were started, still they are running. Right? So Reliance company, like that companies, many companies are there in India. They were started many years back, but still they are running. But who are born in the 17th century, but they are not in present. Yes or not? This we are human being common. So that is born and but death is a common. So but there is no, that is so longer period for the business. So that in this they want to classify. See a small period of our life. We are planning. We want to do the good job. We want to earn the more money. We want in the good position in the society, right? So we want to educate our children, or we want help to the other society. We want help to our relation or family members. So we have many plans. That is ultimately this based on the economy only. So you are planning and you are division. So suppose you are earning every month 1 lakh rupees or 40,000 or whatever amount, that amount you are planning. So for what purpose you have to spend? Just, and most of the people, even a small employer, big employee, they are planning for to purchase. Okay, so one fixed assets, may land, may building, may motor vehicle, some other machines we want to purchase, like that. So you have a simple life. You are planning for many. The business also is running for the longer period. So business have some plans. So the business also business also want know the profit or loss of every year. So if there is no systematic manner, they will never stand in the market. So the systematic manner is a very important for every business or even human being also, right? So hopefully we are running for the longer period, so that we have to follow the systematic manner like accounting, right? Here, as per the going concept, we are running for the longer period. Suppose, for example, so every day we are going to office or college or some work, or your children has to go to the schools. You are planning. Okay, we are carrying the tiffin box. Okay, the mail, tiffin or lunch or evening snacks. Just a simple life we are planning. Just on a day, we are planning many. The business also have some certain plans. So they want to know the profit or loss at the end of the year in a systematic manner. So they will prepare as per this concept only. The business will prepare financial statements for knowing profit and knowing position. Knowing profit and knowing position. Knowing profit and knowing position means, so this year we done the business. We are what is the profit of this year, right? So what is our position? His position is not good. For example, if position is his condition, for example, health wise, his condition is not good. That is health wise. His position is not good. That is economy wise. Yes or not? If he's hospitalized, if he's sick, so we are calling just his condition is her condition is not good because health wise. Position is not good economy wise. So here also the business position. So what are the assets? What are the liabilities? So what is our position? May increase or decrease based on the profit. Based on the profit. So based on the profit, so we are calculating our profit levels and position level. So in systematic manner, if you don't have a systematic manner, we can't measure in the proper way. And that's why by this reason of this concept only, the business as per this concept only, because we want to run for longer period. So see, every day we are pushed to go office or college or somewhere. So first bike is there. So is there petrol or not? Is there air or not? So we are checking ourselves. Okay, daily so you are checking that. We are planning today if you are filled 500 petrol. So daily how much consume, just you are calculating. And the same the business also may calculate assets and liability. They will divide in systematic manner. So what are the fixed assets? What are the current assets? So what are the liabilities? Okay, what is the capital? So as per this concept only, the business may prepare the financial statements, and as per this concept only, the business may divide the assets. Okay, so this is the going concept and is a very important concept. And next, accounting period concept. At the end of the each year, so you must prepare the accounting financial statement as per the going concept. Okay, so at what period you are going to follow? May calendar year, 1st January to 31st December, or 1st March to 31st April to 1st April to 31st March. May you are following financial year or calendar year. So that is accounting period concept. You must mention when you are getting the permission from Companies Act or Partnership Act. You must mention so which period you are going to follow. Which period you are going to follow, and which period you are which period you are going to prepare financial statements. So that is you must follow. That is only for preparation of financial statement on which period you are going to prepare. Next, matching concept. So this concept match the. So like one asset is equal to one liability. One liability is equal to one asset. At the same time, one expenditure. I spent 1,000 rupees for what? What is the effect that? You must explain that. Okay, matching concept. Match the expenses and incomes. Okay, so where you are matching, in a certain place we are going to matching for a periodical, may end of the year, may middle of the year. So for knowing profit or loss, we are matching expenses and incomes. The difference between expenses and income only, you will get the profit or loss. You will get the profit or loss. Okay, so here we are matching the expenditure and incomes. Next, realization concept. The realization concept. The realization concept, revenue essential, it is since determine the particular realization. Realization, the concept means, suppose here the sales, last class we discussed the sales may cash or credit. Even when cash we sold goods, so the cash immediately realized. So when credit you sold, when goods sold on credit basis, the cash will realized after some period. The cash will realized after some period. Okay. So as per this realization concept, so that is should realize at the end of the year, should convert into the cash. So this is the realization concept. Next, accrual concepts. Accrual concept in the business, accrual concept. So we have a three basis. One is cash basis, one is accrual basis, one is mixed basis. Three bases are there for recording of accounting transaction. Cash basis, so there is no accrual, means immediately cash will realize for payment for receipt. But accrual basis, the cash never realized immediately, it realized after some period. So that's why we are calling outstanding, receivable, payable, receivable, payable. So here also, as per this concept, we are recording the outstanding, receivable and payable transactions. Okay. And historical record concept, you must record everything. You must file everything. What is the last year transaction? Simply you have to display. Okay. So these are the accounting concepts and the conventions. The conventions are like traditional, okay, is a traditional, but the concepts are very important. Concepts are very important. As per these concepts only, you are going to prepare the final statements. So that's why must follow the concepts. But conventions, some excuse is there. Tradition, conventions also known as traditions. Tradition means, okay, Indian tradition for women wear the shari. That is not compulsory. No one especially force you. ఖచ్చితంగా మీరు షారీ కట్టుకోవాలి అని ఎవరు ఫోర్స్ చేయట్లా. This is one of the tradition in India. Okay, is a tradition only. So that is here, that is conventions, convention of convertism, and a convention of consistency, convention of full disclosure, convention of materiality. So these are the conventions. And in this convention of full disclosure, so you must display your information at the end of the year. Okay, already we discussed that is accounting information. So you must display your result at the end of the year for attraction of the investor or communicating to the who are attached to you, who are attached to you. So that is communicating purpose only. Okay, see, many we are doing festivals or functions in our family. Okay, just we are displaying our what happened in your family, what happened in your family. Just you are communicating to the relative, your friends only. That is communicating purpose only. Okay, so this happened in my family or this happened for me. So that is communicating purpose. So you must disclose your information. And consistency, stand on one method, stand on one method. Okay, the depreciation, calculation of depreciation you are following. Some methods are there. Which method you are following? Diminishing balance method, straight line method, some other methods are there also there. So which method you are going to follow? Consistency is important. Okay, so from 1st January to April 1st, I followed some method, one method, and I want change. Not like that. If mention what method you mentioned in article of association or memorandum, so that follow that only, that method only, right? And if you want to change the method, you may get permission. Okay, so that is consistency. May say, may telling, so may follow the only one method. If you want change, again choice is there, but it's not compulsory. Okay, but you, if you follow the one method, is a better to you. The consistency is giving. And the convention of convertism, convention of convertism. So convention of convertism, as per this convention, so the variation may calculation of closing stock. Okay, so valuation of closing stock, how your valuation may cost price, may market price. So for recording of provision for doubtful debts, right? So these are the for writing of this and recording of losses, provisions, and estimations. Okay, so for recording of this convention is very much used. That is convention of convertism and materiality. Convention of materiality. The convention of materiality means is the main objective of this. Okay, suppose stationery is there.